Good morning, it's Friday the 10th of November here in London. This is the Bloomberg Daybreak Europe podcast. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, held to ransom. The world's biggest bank is forced to trade via USB stick after a major cyber attack.
The head of the Federal Reserve says the central bank will be careful about where it goes next on interest rates.
And we have a special report on how the wars in Ukraine and the Middle East have thrown normal aviation routes and flight times into disarray.
Let's start with a roundup of our top stories.
The Industrial and Commercial Bank of China, or ICBC, has been hit by a major cyber attack, and the effects have been felt far and wide. As a result of the hack, trades handled by the world's largest bank and the globe's biggest market were forced to use USB sticks to complete transactions on Thursday. Bloomberg's Chief North Asia correspondent Stephen Engel says the details of the ransomware attack are still emerging.
ICBC, China's largest bank by assets, has confirmed that its U.S. division was attacked by this malware, malicious software called ransomware. And again, we don't know the extent of the disruptions other than traders are saying that there have been liquidity issues. Some transactions in the United States in the Treasury market have failed to clear. They've also saying that traders have asked to reroute a number of their deals.
Stephen Engel says the ICBC is suspected of being hacked by Lockbit, the same group that's also attacked Boeing, ION Trading and the UK's Royal Mail in the past year. The criminal gang with ties to Russia specialises in using ransomware to encrypt files on its victims' computers before demanding payment to unlock them.
Now, the Fed Chief Jerome Powell says the central bank will continue to move carefully, but won't hesitate to tighten policy further if needed to contain inflation. Speaking at an International Monetary Fund conference in Washington, Powell said that policymakers are committed to ensuring interest rates are high enough to return inflation to the 2% target.
If it becomes appropriate to tighten policy further, we will not hesitate to do so. We will continue to move carefully, however, allowing us to address both the risk of being misled by a few good months of data and the risk of over-tightening.
The Fed chief also said it wasn't clear how much more inflation progress can be made in the future through supply-side improvements. Traders are now betting that the Fed is at the peak of its hiking cycle and will begin cutting rates next year. The dollar and 10-year Treasury yields added to their advance following the release of Powell's remarks ahead of the address, while the S&P extended losses.
The UK economy probably contracted slightly in the third quarter. That's according to Bloomberg Economics, who believe that today's GDP data may show the start of a policy-induced recession over the summer. We'll get the official figures shortly, but our economists are forecasting that growth will shrink by 0.1% compared to the previous quarter, while rising year on year. They say the strain of higher rates is already showing, while around half of the impact of Bank of England tightening is yet to feed through to the real economy.
Israel says that it has fired back at a Syrian group that targeted a school in the south of the country with a drone. This after the Pentagon said that US military personnel in Syria and Iraq had come under attack 4 times this week. The White House, meanwhile, has confirmed that Israel has agreed to daily 4-hour humanitarian pauses in northern Gaza to allow civilians to escape. But Mark Regev, who advises Israel's Prime Minister, says it's not a ceasefire.
We will continue this operation until we have destroyed Hamas's military machine. The idea of a humanitarian pause is in a specific place for a specific time to help the civilian population who are not the target of our operation. On the contrary, we want to see them move out of harm's way.
Mark Regev was speaking as Benjamin Netanyahu said in a separate interview that a peace deal with Saudi Arabia was still possible despite the ongoing fighting in the Gaza Strip.
Here in the UK, Rishi Sunak is coming under increasing pressure to sack his Home Secretary after she accused London's police of bias over their handling of pro-Palestinian marches. In an opinion piece in The Times, Suella Braverman claimed senior officers were playing favourites with protesters. London's Labour Mayor Sadiq Khan, who oversees the city's policing, says he's concerned by her remarks.
Policing is an independent operational matter for the police rather than politicians, and I worry when Home Secretaries and Prime Ministers try to interfere.
Sadiq Khan's comments have been echoed by the Labour leader Keir Starmer, who says that Rishi Sunak must step in. And Bloomberg has learned that the Deputy Prime Minister Oliver Dowden has been meeting Sunak's senior advisers to discuss a shake-up of senior ministers, which could happen as soon as next week.
US Treasury Secretary Janet Yellen and Chinese economic policy czar He Lifeng have begun talks to set the groundwork for an expected visit to the United States by China's President Xi Jinping next week. Bloomberg's Ed Baxter has more.
Treasury Secretary Janet Yellen meets again today here in San Francisco with Chinese Vice Premier He Lifeng. She is saying the U.S. has no desire to break economic ties with China, but these two-day meetings are aimed at making progress on a slew of economic issues before the heads of state sit down. The White House has already said it does not expect any major breakthroughs, although would like some communication progress. China's main concerns in the supply chains and high tech, the U.S. focusing on fair competition in tech, as well as freedoms and the issue of Taiwan. In San Francisco, I'm Ed Baxter, Bloomberg Radio.
The new Lord Mayor of London wants the city to become a trading hub for the asset classes of the future. Michael Mainelli sees a future for London in hydrogen trading or bonds guaranteeing the removal of space debris. He starts his one-year term as Lord Mayor tomorrow at a time when London's stock market listings are in the doldrums. British investor Pete Flint of Silicon Valley venture capital firm NFX says he wouldn't advise any firms he's backing to list in London.
I'm rooting for more British listings, but I would absolutely not advise any company that I'm backing to go public in the UK. Go and do it in the US, particularly technology. I mean, I don't think the investor base really understands it. And I think they will encourage a British listed company to sort of act more like the other stuff in the FTSE, which are very traditional, whether it's pharmaceutical, whether it's oil and gas or manufacturing. I just think go to the US. The investors understand it. There's orders of magnitude more capital.
Peter Flint of NFX was responding to recent comments from London Stock Exchange CEO Julia Hoggett that she wants the London market to be young, scrappy and hungry in the search for new listings. Now, coming up in a moment, we will hear from our aviation czar about how wars and geopolitical tensions are adding hours to flight times in many parts of the world. But another story that caught our eye this morning is about a partner who left Goldman Sachs and is now staging a cabaret about it.
It looks pretty fantastic.
I want to go.
Yeah,
frankly.
Sparkly dress, the whole thing. Of course, it's at the Cutting Room in New York, which is, you know, hugely famous venue for cabaret and singing. I think it is part of... perhaps it's our version in the financial world of silly season. It's when everyone gets to have a little bit of fun, isn't it? Perhaps outside of work. It's all for charity, I think.
Yeah, indeed. This is Stacy Py, who was a star of fixed income sales at Goldman for almost 25 years. Our colleague Amanda Gordon writing about this story this morning and quoting some of her former colleagues as well, talking about it. She's joking in the cabaret about how she's found a new outlet for a competitive streak after leaving Goldman Sachs and has also found time for golf, which is part of her life after leaving the bank. So an interesting night out, I think, if you're in New York too.
Yeah, absolutely. Look, this slogan grabs you. Divorced, retired, survived. Yeah, bit of fun.
Give you a taste of that show from Stacy Py. Let's turn though to matters financial and Jerome Powell warning that interest rates may have to climb further, echoing comments from other Fed speakers that we've been hearing from. Traders have priced in slightly higher odds of an additional hike. They've pushed back the first potential 25 basis cut from June to July. Joining us now to discuss, Bloomberg opinion columnist Daniel Moss from Singapore. Daniel, great to have you with us this morning. So we saw shares dropping in many key markets across Asia and Australasia after these comments from Jerome Powell. What's been the impact of the words that we heard from the Federal Reserve Chair?
They're perceived to be just a little more hawkish or a little less dovish, perhaps walking back a bit of the dovishness from his press conference after the latest FOMC decision. I don't know that other than a difference in tone, whether we're getting a substantively new message. You know, my sense is the bar for an additional hike is still quite high. They're not really thinking about cutting.
Look, rates markets are pricing for the Fed rate to actually fall by the end of 2024 to 4.55%. What do we think the rate trajectory looks like? It did move a little bit after Powell spoke.
Yeah, but again, has it moved substantively? I mean, these things aren't static. You know, the real question is, did Powell change his underlying message? I'm not seeing anything that suggested he did. Maybe it's trying to convey, look, we didn't want to come across as too dovish at the post-FOMC press conference. It's not necessarily an indication that their underlying message, that they're going to proceed carefully. There's no indication that that message is being altered. It is my perception, my feeling, that the bar for an additional hike is quite high. To all intents and purposes, they are done. Might there be an extra 25 somewhere? Sure.
Danny, we're at this point now in the hiking cycle of many of the major central banks where we're thinking about being at the top of the rate hiking cycle, and this conversation about a potential another hike coming from the Federal Reserve, interesting to discuss as well. Of course, it's something that's come up at the New Economy Forum in Singapore, where you are as well. Citadel founder Ken Griffin talking about the world facing higher baseline inflation that may last for decades. I wonder in that context, how interesting a moment is this when thinking about global central banking and how they tackle the idea of inflation perhaps staying with us while they're stuck in this moment of not wanting to push the economy too far?
In my view, central banking is always interesting. I mean, I have a stack of central banking books on my nightstand, so it's never boring for me. I would be cautious about, assuming that the levels of inflation we've seen are permanent. Don't forget, in the decade before the pandemic, the anxiety was, my God, inflation's just too low. We could use a little higher inflation. Thank you very much. Janet Yellen, when she was then Fed chair in 2017, called inflation's quiescence a mystery. And that was in the middle of the longest US expansion on record. So, we need to be careful about assuming things are going to last for decades and decades. And it's important to add that the Fed's preferred gauge of inflation, PCE, has come down significantly over the course of this year. Last year, they had a problem, no question about it, and they were determined to get on top of it. And they appear to have done that. Now, is it too high for comfort? Sure. But is it high and coming down or high and remaining high? It's high and coming down.
OK. Daniel, thank you so much for being with us this morning. Bloomberg opinion columnist Daniel Moss there, joining us live from Singapore.
We're turning to matters elsewhere now. The Middle East has long been a global crossroads for air travel, but flying those routes has become more difficult in recent weeks, with airlines forced to skirt war zones and curtail services as a safety precaution. That's after Russia's invasion of Ukraine had already added hours to many journeys by shutting down vast airspace to many transnational operators. Joining us now to discuss Bloomberg's global aviation czar, Anthony Palazzo. Great to have you with us on the programme, Anthony. What's been the impact, first of all, of Russia's airspace being closed on long-distance flights?
Well, it's been a big problem for the U.S. and European airlines. It's added hours to trips that used to fly over the top of the globe through Siberia, especially to North Asian destinations like Tokyo and Seoul and Shanghai. It's even caused the Scandinavian carrier Finnair to completely change its long-haul strategy, which used to give it great access to shorter trips to Asia based on its geographic location. So big U.S. and European carriers like United and Air France have complained loudly about this. Chinese airlines can still overfly Russia, as can Indian airlines, because they're not subject to the Russian sanctions. And that puts them at an advantage.
Israel is at war with Hamas, though. How has that added to the difficulties, Anthony?
Well, it's had an effect in a couple of places. First of all, it's made it harder to fly in and out of the region. So most carriers stopped flying to Tel Aviv shortly after the October 7 attacks by Hamas. And some airlines like Lufthansa are avoiding nearby cities like Beirut because of the danger that they perceive. And so then travelers also aren't eager to fly into the Middle East. So we've heard from a number of airlines, from Ryanair to Air France, and we heard from Wizz yesterday, and they've all reported a softening of demand to the area. So that's something we're keeping an eye on.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.